Welcome to Expert Profiles Atlanta, where Atlanta's influencers and innovators share strategies for overcoming obstacles and achieving success in business and life. Here's your host, best-selling author and Atlanta influencer, Neil Howe.
Hello and welcome to the show. This is your host, Neil Howe, and today my guest is Quanyatta Benson, and she helps individuals and entrepreneurs go from denied to approved within 90 days. She has been an entrepreneur in the finance and credit industry for the past 20 years. Welcome to the show, Quanyatta Benson.
Well, thank you so much, Neil, for having me.
Well, let's get right to the quality content here. Tell us a little bit about your company and the clients that you're helping.
Well, YBW Consulting was started probably about 10 years ago. It kind of coincided with my love of finance. So I've been in mortgage lending for about 20 years. And during that process, I met so many people who at that particular time wanted to qualify for mortgage and other financing, but unfortunately, they weren't able to. And the downside of the banking industry is basically you have to come ready. You know, there really isn't enough time, or as far as like loan officers and people in banking, to help you get ready. So if you're not ready, all we can do is basically, deny your loan and move on to the next person that's ready. So like I said, I basically got tired of seeing so many people come to me for a mortgage or spoke of other type of financing, but they weren't ready and they did not know how to get ready. Mm-hmm. So that's how YBW Consulting was birthed.
All right. Tell me, what does YBW stand for?
Well, again, I said this. I started my company, several years ago. So when I was a younger woman, I guess I'll say it like that. So, YBW is basically young boss woman or young business woman consulting.
Yeah, I love that. So tell me specifically about, these people that are trying to get mortgages, what is the problem? And I know a lot has changed in the mortgage industry. We're talking your 20 years here. So you've gone through it. What kind of problems are they having today that are stopping them from getting a mortgage?
It's a combination of things. One, dealing with credit. A lot of people, there's a lot of information out here, either online or, you have your credit repair people and so forth, that's giving information about how to increase your credit scores. But you still have a lot of people who are afraid of credit, and they just don't know how to get unstuck. So we have, like I said, credit situations. Also, there's, situations of how you're reporting your income. A lot of W-2 people, they file their taxes and things of that nature, but they're writing off a lot of their income along with your self-employed borrowers. So, not only do we look at the credit as far as getting your credit scores and your credit profile to a point where where you could actually qualify for financing, but we also look at your income and how you're filing your taxes, and so forth and so on, to make sure that you're not, writing off or excluding yourself from being qualified because you don't have enough income to sustain whatever type of financing you're trying to get. So, like I said, it's the biggest things: credit and income. And then we also look at like your assets, how you're functioning with your bank statements every month. Do you have a lot of overdrafts? Those types of things. We have to look at all of those things when it comes to actual lending outside of just, getting a credit card or something of that nature.
And these are things that people don't necessarily think about when they are, just going through life. They're trying to do the best thing for them as far as the day-to-day. And then all of a sudden they're looking to buy a new house or a new car or some other big purchase, and they're not prepared. So what kind of things can they do to get prepared?
Exactly. Well, the first thing, especially dealing with credit, take a look at it. Know what's in your credit profile, know which accounts, are reporting accurately, know which ones, that you maybe paid off, but still showing a balance and hasn't been updating, it's kind of like, getting to know yourself. Once you become a teenager, your body and things, it goes through a lot of things. And then once you become a young adult, there's some more changes. So you have to take time to get to know yourself. And credit is all a part of getting to know, yourself and what picture you want to project when you're not meeting a person face to face. And then the next thing would be, a lot of people don't know how much money they make. I speak to people all the time, and that's one of the questions that I ask. Okay, what's your annual income? And a lot of times they can't tell me. Or, how much money do you make an hour, or whatever, the case may be. They always have to, kind of reference back to some documentation that they may have. And it's good to have those numbers in your head, no matter where you are. Know how much money you make, your gross as well as your net. And then that way, when working with me, we help with budgeting along with the credit and getting getting the income where it needs to be. So there are a lot of things that encompass, getting in position to get qualified for a home, for an auto loan, or take, for instance, even a business loan. That most people don't know about, and their primary focus is just getting their credit scores, but all the other components are left, untouched. And then they're kind of disappointed because they worked, on the credit part of it, but everything else, kind of faltered along or whatever, and then they get discouraged. It's like, well, I'm just not going to do it anymore.
Mm-hmm. So you really need a plan. It's more than one thing. It's more than fixing your credit. There's, these other things that you have to look at. And, with a lot of entrepreneurs now that are working for themselves, and you said that they don't really know what their income is. Well, many entrepreneurs have income coming in from all different kinds of things, and it's not like they're just getting a W-2. So what's the best strategy for putting this all together?
Okay. What I say for our entrepreneurs, small business owners or solopreneurs, make sure you have a separate account from your personal banking account. That's the biggest thing that will help a person to realize, what's their average, revenue. If you keep those things separate, then you'll be able to know, as like you said, have an idea of what your business is bringing in. It would also help, like if you come to me or another consultant, to help you figure out, okay, what are some things that you may need to do in order to increase your revenue. But if you don't have that separation between personal and business, then it's really difficult for someone to help you to elevate your business.
Mm-hmm. So as far as the credit, we said in your introduction that you help people go from denied to approved in 90 days. What kinds of cases are you working with? Are you looking at people that have 400 and 500 credit scores, and what are you trying to achieve to get them qualified?
Yes, sir. Okay, so yes, we do have clients who have had, credit scores in the 4s and 5s and so forth, along with those, that may have been in like the low 6s or mid 6s. Typically, what we do is focus on the accounts that are really affecting your credit scores. So it isn't just, us eyeballing or looking at your credit, but we also have a program that specifically tells us which accounts are having the most impact on your credit scores. And those are the accounts that we would focus on remedying whatever the situation may be. So take, for instance, if you had maybe 3 or 4 collections accounts on your credit, and most people feel like, okay, I need to go and pay all of these collection accounts off, and then that will increase my credit. A lot of times that does not work, because based on the age of those collections accounts or charge-offs or what have you, they may be over 12 months old, and it's no longer having an impact on your credit scores. But you may have a credit card that you've been paying on time every month, but it has a high balance in relation to the credit limit. So those 3 collections accounts that are over 12 months old, they're no longer affecting your credit. It's basically this one revolving credit card that you have that needs to be either paid down or something else that needs to happen to it. That's basically keeping you from achieving those credit scores that you would normally, be able to get. So initially, in my first, basically the consultation, which is an hour, we would take a look at, exactly what it is the client is trying to achieve. Are you trying to purchase a home? Trying to buy a car? What exactly are you trying to do? And then from there, we would tailor the plan to reach that goal in the time frame that the client is looking to do that. So typically, my average client is done within 90 days.
Well, that is excellent to be able to make that big of an improvement in 90 days to help them reach their goals. Now, as far as the credit, a lot of things that stay on your credit for 7 years or 10 years even. Are you saying that some of those things don't have an effect on your actual credit score? It's the new stuff that has the biggest effect?
Yes, sir. So take, for instance, going back to the charge-off accounts or collections or what have you. If those accounts are over 12 months old, then the major effect that it would normally have on your credit score is basically, no longer relevant. If you go back and pay those accounts off, the creditor 9 times out of 10 will go and update that information on your credit report. Now, once they update that information, it starts to take on the feel of a new account. So you have a new derogatory account, and that's where you get the hit again.
So it's almost better off just not to do anything about it.
In some cases, yes. Mm-hmm. So that's what we, try to help clients avoid those types of pitfalls by, doing things that aren't going to provide the necessary increase in the credit and have the overall profile, looking to be one that a lender would want to, extend credit to.
Right. And that is something that I certainly didn't know. I thought all these past derogatory accounts would need to get paid off first. But, what other misconceptions and misinformation is out there about, trying to get your credit in line and, get approved for something?
Another misconception is you can have too much credit. I don't know where that came from, but I hear it a lot. People ask, should I close an account? Or, I have 5 credit cards. Should I close these accounts? The way the credit bureaus work, you have to have open accounts in order to achieve a credit score. So if you have accounts that have been open for, a year, 2, 10 years, it would do more harm to close the account 9 times out of 10 than it would do, as far as helping you. So what I typically do is look at those individual accounts. And if the balances need to be paid down or brought to a zero balance, then let's focus on that. opposed to closing the account. If you're not using the credit, then there's no harm. It looks good for you to have a lot of credit out here and you're not, and you don't have to use it. But if you close that account, you lose all of your good history. You lose, the credit limits that you work to achieve and all of that. And basically it starts you over.
Right. So what are some of the fears that some people might have about just dealing with the credit? Do they think that maybe it's beyond repair, or that it's been bad for so long that there's nothing that they can do about it?
Yes, a lot of people think that, or they think it's going to take, an excessive amount of time to get them to where they need to be. Now, I will be honest with you. There are some people, it has taken them a while to get to that point as far as, not having great credit. So it may take a little bit longer, to get you from a not so good place to being able to qualify for pretty much whatever you want. But again, I don't believe in the fact of it taking, years, to get to that level. When you educate a person on, like I said, credit and how it's used and how you should use it, it becomes a level of comfort in how people, maneuver when in their everyday actions as far as when it comes to credit. So along with us educating about, what needs to be corrected on the credit report, we also educate our clients on how not to be fearful of credit.
Mm-hmm. And what about there's some information out there about debt consolidation, mm-hmm. and that can actually be bad for your overall credit score. Is that true?
It is. The debt consolidations, or like the debt consolidations companies that I've researched in the past and so forth, typically the accounts have to go into either a 90-day or 120-day past due status in order for them to be able to help you. Once you get to that point, a lot of times the creditors aren't looking to set up a payment plan. And then if they do, you have a payment plan for what they're going to pay the creditors, but you also have an amount that you're going to pay the debt consolidation company. And unfortunately, the majority of that monthly payment is going towards the debt consolidation company and not your actual creditors. Mm. So it's still, it's still not putting you in a good position to be able to rebound in a fast way.
So what is something that people need to know about hiring a person like yourself, Quanyatta, mm-hmm. to, help out with this problem? What should they be looking for?
The biggest thing, look for a person who, number one, has the experience. How long have they been, either in the financial industry? How long have they been working with credit? That in itself would help you to weed out a lot of the people who may be offering, like say, credit repair or some other type of consulting to get you in position. Because, in my opinion, you have to have a track record of, the things that you're offering and the advice that you're giving, if it's successful or not. And, we can all come up with a lot of great ideas, but if you don't have the track record and the proof behind it, then you're just working in theory.
Mm-hmm. So before we get into a couple of examples of people that you have helped and the outcome of that, I want to ask you one last question about the interest rates and what that is doing for people trying to get mortgages nowadays. We've mm-hmm. seen the interest rates creeping up. What do you think that's going to do to the industry?
I think as far as with the interest rates creeping up, I mean, it's a good and a bad thing. It's a good thing, that it kind of gives us a little bit of comfort that, the economy is stabilizing. stabilizing and so forth. But as far as for people who, saw interest rates in the threes, and now, they may be creeping up to maybe like 4.5, it's a lot of, on my part, it takes a lot of educating and explaining to people, why this has happened. So just because right now, you're at a point of saying, okay, I'm working on my credit. I want to get my income where it needs to be so I can qualify. But if you can't get that 3% interest rate that was maybe a year and a half ago, it doesn't mean that 4.5, means that, all my work is just in vain. It just means that right now, based on the current circumstances, the current economy, this is what the market is bearing. So instead of you, focusing on, okay, I should have done this a year and a half ago, work with where we are right now and then be able to build on that. Because if rates go back down, so take, for instance, if you bought a home today and your rate was 4.25, but you looked at, 6 months ago, interest rates were at a 4%. If we're talking about real estate, you're still in a position of building wealth. So even at the 4% or the 4.25, you're still in a good position of building wealth opposed to still renting. Mm-hmm. So I try to get, people to look at things from, several different angles, and to always show them that, hey, because you're doing this, you're taking this particular action, you're still putting yourself in a better financial situation in the long run.
Definitely. And what products are available to them as far as mortgages to, do you still offer fixed rate mortgages for a period? Is that something they consider?
Yes, sir. So in this particular climate, like your 30-year or 30 and 20-year, we also have your 15-year fixed rate. Those are the most attractive interest rate offerings. And then once you get to a little bit more sophisticated type of mortgage, such as your jumbo loans and, maybe some of the programs for your self-employed borrowers, yes, you still have those fixed rates available, but you also have what we call like interest-only loans. Mm-hmm. But at that point, you have to have, your credit scores need to be close to 720, and it's only a small percentage of the products that are offered now that will allow you to do an interest-only interest rate. So the main push or the main goal is to have either a 15, 20, or 30-year fixed rate.
All right, Quanyatta, then tell us a little bit about how you've helped some people that you have come across in your career. You've been helping people for the past 20 years. Are there any cases that spring to mind that, you had somebody come to you in a desperate situation, you were able to help them out, and ultimately, what was the outcome for them?
Okay. Well, I'll share one of my most recent stories. I was working with a husband and wife, and prior to coming to me, they had been turned down by 5 different banks or 5 different lenders. And each time they were turned down, they were given, little generic information as far as what they needed to do. I remember the wife was telling me that one person told her, she needed to open, get a credit card or what have you, or open a new account. But she was like, okay, if everybody keeps denying me, how in the world am I going to open an account when nobody, when no one wants to give me credit? So that was one issue. And then after I started looking at not only their credit, but also their income, how they were filing their annual, tax returns, that was another problem. So even if their credit was where it needed to be in order for them to qualify, the way that they were actually filing their income taxes for the past 2 years, wouldn't have allowed them to qualify for any loan because they did not have enough income based on what they were trying to achieve. Okay. So during that period of time, I created a plan for them. And the wife was very aggressive. The husband was like, he listened to all the information, but he pretty much left it up to her to actually do the work. Mm-hmm. And she was very aggressive, like I said, with implementing the things that I told her, which in their case, they only needed to do 3 things. She did need to open an account. And basically, I directed her to an institution that I knew would automatically approve them. So they opened that account, and then they had one small account that was on her credit that she needed to pay off. Those were the only 2 things that I asked them to do. She got those things taken care of in about 3 weeks. And at that point, their credit score increased 113 points.
Ooh, it's a big jump.
Exactly. So they literally went from not having credit scores high enough to get approved to now being able to have options of the types of loans that they could possibly qualify for. And in addition to that, as I mentioned before, in reviewing their tax returns, the husband was self-employed. He was writing off all of his income. Mm-hmm. So at the end of the year, they were averaging about $12,000 a year of income. And $12,000, unfortunately, these days won't get you very much. Nope. So I got them connected with one of my partners. He's an accountant in their area. We went over everything. I, worked closely with the accountant to get their tax returns amended and, and reporting properly. And they went from, like I said, from not qualifying for anything to having 2 options of getting a mortgage, finding a home, and closing on their home, all within a 5-month period.
Well, that is definitely a great success story. Tell us a little bit more about yourself and what inspired you to help people get mortgages in the lending industry.
Okay. Well, again, my name is Quanyatta Benson, and I have 2 sons. And basically, my oldest son was my inspiration to get into the mortgage industry. I had moved to a different state, and he was a toddler at the time. And I was looking for something to where I could work from home while I was in school. I was going to college as well. And one day I answered an ad, and again, this was during the time where we actually, looked in the newspaper for jobs. So I, saw there was an ad in the newspaper that basically asked, do you love numbers? And I think they said, do you love numbers? Do you have a computer? And are you willing to work from home? And from that ad, I answered, had an interview, and basically learned about the mortgage industry. Mm-hmm. And my mentor at the time, she had been in the industry about 15 years. So she taught me everything from processing a mortgage all the way to, structuring a loan and how to actually get a client closed. So I worked with her, and from there, I just have a love for what I do. I enjoy, helping people figure out problems or figure out solutions to their problems, rather. Mm-hmm. And I also love real estate. So it's like the best of both worlds.
Yep. You've definitely got yourself into a great industry there. Real estate and the mortgage industry are 2 great industries, especially in Atlanta. Atlanta is a pretty hot market right now. So if somebody is looking for help, Quanyatta, what's the best way for them to get in touch with you and YBW Business Consulting?
Well, they can reach me by phone at 678-824-5257, or you can feel free to send me an email, and it is Quanyatta, which is QUANYATTA at YBWconsulting.com. And you can also reach us on our website at www.ybwconsulting.com.
Excellent. Well, thank you very much for being my guest on Expert Profiles Atlanta today. We certainly learned a lot about the mortgage industry and how to repair credit and how to make sure our income is in order. I think you've definitely helped our listeners out a lot.
Well, thank you so much, Neil, for having me. And I wish you nothing but, great success with your show.
Thank you very much. And to our listening audience, if you like what you hear, hit that like button and share, and we'll see you next time on the show.
Thank you for listening to Expert Profiles Atlanta with Neil Howe. To learn more about the resources in the show or to listen to past episodes, visit expertprofilesatlanta.com.